The biggest day of the year for the gold price, for the silver price. Today, we'll hear from our friend Jerome Powell at the United States Federal Reserve regarding monetary policy, but what does it mean? And even more important, I'm going to cut right to the chase. I was having a conversation this morning with an executive from a bullion company, and I had an aha moment. And we were talking, and, he was talking about how kind of the bizarro world that we live in, where there's so much importance placed upon what Jerome Powell and the Federal Reserve says about interest rates, where everybody's so paying attention to it. And I realized, and I want to share this with you because it was a very deep, very pertinent thought. Like, yeah, it's so screwed up that we're living in this fantasy, make-believe, unicorn fart dust, whatever you want to call it, paper money, electronic money, money printing, quantitative easing, quantitative tightening, repos, reverse repos, all these crazy smoke and mirrors tricks. I told them, his name's Mike. I said, Mike, it's like we're waiting for the Wizard of Oz to come out today and talk, and everybody's so crazy. And we're going to get into all the details, right, about what to expect and what it means, blah, 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 blah. What we're going to do here is try to turn off the smoke, point the mirrors the other way, and see what's really going on. How will it impact the silver price, the gold price, and the platinum price? But it was just one of those moments. I'm like, what a bizarro financial world we're living in. That's not the kicker, because I got a kicker for you on this one. I know you guys like kickers, okay? I know you like, well, anyway, we'll get to that later. Susie tells me I have to stay on track. I'm trying to enthrall you, okay? Are you enthralled yet? Because the kicker is this. Yeah, we're living in this Wizard of Oz, make-believe, paper money, electronic money world. But think about this. What if we were still on the gold standard? What if we used real money, right? Like what's at the bottom of Exter's pyramid. John Exter, former Federal Reserve economist who didn't die that long ago, who spent his life trying to explain to everyone how silver and gold are the base of all money. Always have been, always will be. But what if we were still explicitly using gold? We wouldn't care about the Fed. There wouldn't be any of this, smoke and mirror pony clown show that they're doing. And everybody's, it's ridiculous. I don't watch CNBC, maybe 5 minutes a month at most. Okay. What do you think they're all talking about today? Oh, the Fed this, oh, the Fed that, What if we were using silver and gold? What if when it gets back to being the base of our real money, right? We wouldn't care about this make-believe Jerome Powell and what he says and doesn't say. And we've already covered ad nauseum, we have, right, my friends? That he's been so wrong about so many things for the last, 10 years? Right? Inflation's transitory? Is it really? Is it temporary? That's what you also said? Yes? Okay. Oh, somebody found the hot dog. We have a new little game we're playing. We'll see how it goes. It's called Hide the Hot Dog. And there's a hot dog. Pete, the reason why I'm doing this is because so many of you reached out saying how you like looking for what are called Easter eggs in my basement. Easter eggs are like hidden little things. So every day I'm going to hide the hot dog. Somebody found it. Can you find the hot dog? It's somewhere on the screen. I can actually see it right now, but we're not here to talk about hot dogs. We're here to talk about the Fed and what's going to happen. It's going to be an interesting day. It could make for huge, massive moves in the silver price. And, Jerome's playing hard to get. Like when you were younger and you wanted to find a girlfriend or a boyfriend and you would play hard to get and manipulative. That's exactly what Jerome is doing right now. Interest rates are important. Unfortunately, we are forced to live in this Wizard of Oz fantasy land that they've concocted, the financial fantasy land, right? Fantasy Island. Remember that show? You're probably as old as I am. Fantasy Island. Remember? De plane. Anyway, we're forced to live here on the fantasy financial island, so the interest rates do matter. But what's more important than interest rates is where interest rates are relative to inflation. And we know that inflation is going up, up, up again. This happened back in the 70s and 80s, guys. We had a wave of inflation and then it kind of went away. And then we had a second wave. It's kind of like the hurricane. When a hurricane hits, okay, there's the first wave, then the eye, and then the second wave. And the second wave is always, always stronger. What's so important is not just the interest rate. They could raise interest rates again, right? They're going to do all kinds of tricky stuff. Be prepared. All kinds of verbal diarrhea. That's as nasty as I get on this show, but that's really what it is. But at the end of the day, what really matters is the Fed has run out of real ammunition. All right? And interest rates are going to get to a point where they're lower than inflation. And when everybody else wakes up, everybody else, like your Uncle Fred or your Uncle Dick or whatever uncle you may have, right? The one who doesn't know anything about what's going on, but can tell you all kinds of interesting stats about whatever, you know. But when they start to wake up that, you know what? Inflation's picking up again, then that's going to be the big, big turn. And it's coming. It's going to happen. And when it does, right, we aren't going to brag. I don't want you to brag. Don't brag. And we could be wrong. I could be dead wrong. I mean, I guess the argument could be made that we're kind of wrong right now. But when it happens, when reality sets in for the mass, you're going to know that you are out ahead of the curve. And it's going to be a very interesting time for the silver price and the gold price. The Fed, yeah, you know, so what if they're able to raise rates a little more down the road? What really matters is the devaluation of the U.S. dollar. And when inflation gets above the real interest rate again, that's exactly what we're going to have. Negative real interest rates. And guys, stagflation, we have that right now. Okay, if you look at the real statistics, shadow stats and the others, we have that right now. Negative real interest rates, do we have that now? Maybe, maybe not. Okay, the problem, what we're dealing with here are government statistics versus real statistics, and the real world statistics paint a much different picture than what the official Bureau of Labor and Statistics are going to tell us. Whether we're talking about GDP, inflation, employment numbers, no matter what. It's a well-known fact that those numbers are heavily massaged, I guess you would say. They've been manipulated. I'll go ahead and say it. Let's talk about what to expect today from the Fed. This is interesting. This is what CNBC says. Actually, I have a quick article. I want to read you some of the highlights from what CNBC. Oh, yeah, that's where Cramer is, Jim Cramer. He's a financial wizard. Yeah. CNBC says, here's everything the Fed is expected to do on Wednesday. Key points. There's virtually no chance the U.S. Central Bank will choose to raise its benchmark borrowing rate when its two-day meeting concludes on Wednesday. So here in just a couple hours, the meeting's concluded. Jerome will give his announcement, or the Fed will put out their announcement, and then they'll have a little talk, right? There's I read earlier today, you probably saw this as well, they're saying there's like a 1% chance that they're going to raise rates, okay? What about lower rates? Boy, wouldn't that be crazy? There's probably a lesser chance that's going to happen right now, but nonetheless, they're saying just 1% chance they're going to raise rates today. If they do raise rates, that would be like an atomic bomb for the precious metals prices. That would not be good. We don't want to see that happen. And it's a very minimal chance that would happen. Okay? The meeting will feature the Fed's quarterly update on what it expects for a bevy of key indicators: interest rates, gross domestic product, inflation, and unemployment. Now, remember, we got some keys to talk about here regarding the Fed, but remember what the Fed expects. They also expected 2 years ago that inflation was not a problem. Inflation was transitory. Inflation was temporary. And then Jerome had the gall to tell us 2 years ago that he wasn't going to raise rates until the end of 2023. And you know that story. They just finished raising rates. They're not supposed to be raising rates until right now, but we're going to listen to this guy? The Wizard of Oz of fantasy, what did I call it? Fantasy Financial Island that we live on here? Welcome to Fantasyland, right? Everything's fine. We can just print money. We can, as long as the 1% do okay, everything's fine here on Fantasy Financial Island. Yeah, right. I don't buy it. There's widespread belief the Fed will make sure the market knows that it shouldn't make assumptions about what's next. So they don't want you to make assumptions. You know what they want you to do? They want to spin your head and make everybody confused. They don't want you to know what's really going on. So be prepared, okay? You're a smart person. You can look at the forest through the trees. The situation right now in this country, if things remain the same, is not looking good. We just hit $33 trillion in debt. We are spending $1.4 trillion more every year than we're bringing in. The banking sector is on life support. We have some bonds, 30-year Treasury bonds that have recently hit a price. They basically went down 50% in value. Those are the types of bonds. Now that's the extreme, nonetheless. But those are what the banks are holding up. We haven't talked about commercial real estate for a while. I guess all those office buildings are filling up, right? No, wrong. Commercial real estate's the banking sector is on life support. I would say, wouldn't you say that our government, with the numbers that I just talked about, aren't they on life support also from a financial perspective? I would say, yes. Think about this. Think about you as a person, as a household. You manage your money. We're all forced to manage our money. Let's just, for simplicity's sake, say you make your household makes $100,000 a year, and you were spending $150,000 per year, and you already had a big pile of debt. I won't go through all the student loan debt you have, car debt, credit card debt, mortgage debt, all kinds of debt, and you're spending $150,000 and you're only bringing in $100,000. Would you say you're on life support? I would say you are on life support, and our government's on life support. You got the banks on life support, the government, the consumer, the American middle class, the working class, the people that do all the work in this country. And that might be you. Are you one of those people? I'm one of those people. I love what I do. I'm working right now. I'm the luckiest guy on the planet. I get to connect with you, right? But the middle class that works, right, does all the work, they are on life support. They have credit card debt at all-time highs. They've got, the whole list, right? Their real income, your real income. Congratulations. It's called Bidenomics. And according to our president, this is what he said, and this is how he said it. It's called Bidenomics, and it's working. It's working. I don't know what financial fantasy island he lives on, but, President Biden, you might want to check with the middle class and see how they feel about how great it's working right now, because their real incomes have dropped by about 10%. Over the last 2 years, but it's working. So you got the Fed. Oh, that's right. This is about the Fed. What am I thinking? You got the Fed, the Federal Reserve. Somebody complained that I was calling him Jerome. I have our Jerome, right? He's in a position now. Banks, government, consumer, and there's more. We won't go there. Things, right, are on life support because of the high interest rates. The high interest rates put even more pressure on all those sectors, and we have inflation going up, and he's going to raise interest rates more? That's going to be really interesting. Give me a break. No, we're headed for what is most likely a big recession, which will require monetary easing, which will only feed the inflation fire higher. And you know what happens next. That's when everybody wakes up. That's when Uncle Dick realizes, you know what? He was right. I should have bought some gold. I should have bought some silver. Hey, if you want to buy some gold and silver, you know the number one most important factor is that you trust the company you're getting it from. Trustworthiness is paramount in the bullion dealer industry. I trust Pimbex. I worked with them before they became a channel sponsor. So if you're looking to get some silver, gold, or platinum, go check out Pimbex. 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 I love to say it, but I love the company even more. They've got the best prices also on top of all those other positive factors. Now, as we move through, let's move on. Let's move on. This is interesting. This Investopedia. The Fed's anti-recession playbook may get harder to use, economists predict. Here, key takeaways. People are saying we're going to have a soft landing, we aren't going to have recessions anymore. This is from top economists say recessions will be more common in the future. Economists at Deutsche Bank predict. Deutsche Bank. The strategies that countries have used to prevent downturns, deficit spending, monetary stimulus from central banks, are getting harder to use because of growing national debts and economic factors pushing up inflation. Oh, I'm going to finish then. I'm going to tell you something big. Economies have followed boom and bust cycles for most of history, making the past 40 years of relative stability something of an aberration. The economists argue. These are top economists saying recessions are coming. Inflation is not going anywhere. Guys, we are likely, I don't have a crystal ball, but I can sure look at a bunch of trees and see the forest, and maybe you can as well. But we are heading into a situation just based on the numbers here in the U.S. domestically, where inflation is going to be a problem. But wait, there's more. Yeah, there's even more. Okay? And I'm going to get to that after I ring the bell 10 times because we got 100 thumbs up. Excuse me. Please help me out. Please press that thumbs up button. Hey, thank you, Bobby, for that super chat. There's more. Bobby Seal says, I wonder what silver is going to be worth when the aliens, aka demons, show up in the blue sky. Yeah, that would be an interesting scenario, Bobby. It would either be really valuable or not worth anything if we do have indeed an alien invasion. But I'm not banking on that. I'm not predicting that. But you know, I guess nothing is out of the realm of possibilities now. Now, guys, just looking at the numbers in the United States, looking at the economy, the debt, all that stuff, it's obvious. Inflation's not going anywhere. The value of the dollar is the real value is going down. We know the value of the dollar has plummeted over the last 50 years, period. But there's a massive, big other factor. And we talk about it all the time, and we're going to talk about it again briefly right now, and that is the other half of the world, the other 2/3 of the world that is moving away from U.S. hegemony, and moving away from the dollar. They are explicitly putting things into place to de-dollarize. Goldman Sachs is talking about it. JP Morgan's talking about it. Bloomberg is talking about it. Reuters. We haven't talked about our friends over at Reuters for a while. Reuters is talking about it. Not only is the USA screwed themselves up royally on our own, you didn't do it, I didn't do it, these politicians did it, okay? But now the rest of the world is like, sorry guys, we're done playing your game, is essentially what's going on. Whether you're talking about Saudi Arabia, China, right, South Africa, India, Argentina, the list goes on and on. You know that. And the list, unfortunately for the United States and the United States power structure, continues to grow. All right. Here's a quote from our buddy here. Quote, "The fact that we've only seen 4 recessions over the last 4 decades is very unusual, and one that's likely to repeat without an enormous amount of good luck," wrote economist Jim Reed, strategist Henry Allen, and analyst Galina Padzrakolabaca. Yes, interesting. Interesting. Hold on. Bear with me. I'm trying to take little breaks so we can all relax for a minute. All right, and here we go. This comes from FX Street. That rally in gold might not be over just yet. Now, when we talk about gold, we're talking about silver as well. We're talking about platinum as well, okay? This guy, his name is, I can't even think. He's a PhD and a chartered financial analyst. I've never seen a name. Here, let me show you. See if you can. You probably can't see it. There. You see that name? Premlugslaw Kowickian. He's a PhD and a chartered financial analyst, which to me doesn't mean anything, but nonetheless, it sounds impressive. He says reversals are important, especially when confirmed by high volume. Last week's reversal in gold worked. It rallied just as he had warned. He's bragging. The funniest thing about this rally is that it has little sense, and yet it is still quite possible for it to happen. Why? Interest rates. Okay, we're talking about that today. That's the big theme of the day. The Eurozone raised interest rates. Germany is in a recession. A lot of Europe is either in or teetering on a recession, yet they raised interest rates, which surprised the market. Are we going to get a surprise today? Is that 1% chance going to come through? Guys, we can deal with anything, right? It would be horrific, it would be horrible, but we can deal with anything. Theoretically, globally rising interest rates should cause the gold price to decline, just as lower interest rates have caused the gold price to rally. Instead, the gold price moved higher. So, in the short run, that can work, though. The reason is that's what's bullish for the euro, okay? Higher interest rates set by the ECB means the euro goes up in value, can be bearish, meaning the dollar goes down in value. Nobody talks about this, and I'm going to talk to you about it right now. Traditionally, when interest rates are rising or lowering, it's the United States Federal Reserve that sets the pace. Okay, they're out ahead of the pack. And everybody else kind of does what the Fed does, but on a bit of a delayed schedule. So that's likely what we saw when the Eurozone raised rates. The next, when rates start to be cut, it'll be the USA that'll cut it first, and that will be very, very bearish. That'll make the value of the dollar, the DXY, go down, down, down. Why is that important to you as a silver, gold, and platinum investor? Because when the dollar goes down in value, the price of metals will go up, 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 and it's bound to happen. Now, that's valuing the dollar against a bunch of other crappy currencies. We've talked about that ad nauseum. The dollar, in real terms, no matter how you measure it, is going down in value. And that trend will continue in the coming months, quarters, and years. You can slice it or dice it however you like, right? Jerome can use his smoke and mirrors, show whatever they come out with today, which is going to be, just a bunch of talk. Remember, the most important thing to do with the Fed is to watch what they do, not what they say. What they say those are the surface level people. They will believe whatever the Fed says. We are already covered. We know not to believe the Fed. Watch what they do. That's the most important component to keep in mind. It really is the Wizard of Oz environment right now, where it doesn't make any sense whatsoever. Let's touch about silver. I want to talk about silver and what's going on again in the silver market. New price. I'm excited about this prospect with silver that we could be experiencing a new price discovery mechanism. Before we get into silver, I want to recognize gold company, who's also a sponsor of Ron's Basement, First Mining Gold, but it was started by a highly respected, like legendary guy in the silver sector, Keith Neumeyer. Keith started First Mining Gold about 6 years ago. They have a portfolio of huge development projects, gold development projects in Canada. They're a channel sponsor. They make this possible. Please go check them out, firstmininggold.com, and you can reach out to their director of investor relations. This guy will actually talk to you and talk to you about the company, Paul Morris. Okay, his email address will be in the description, paul@firstmininggold.com. Let you in on a little secret. They've got 2 5 million ounce deposits that have already been drilled, already been defined in Canada. The Spring Pole project and the Du Parquet project in Quebec, which is super exciting. Do your own due diligence. Mining stocks are risky, but to me, the value proposition, especially in the development side of the mining sector, is unprecedented. And it's not just me saying this. Peter Grandich, you know who Peter Grandich is? He's been on CNBC. He's been on NBC. He's been everywhere. He will tell you that the mining stocks, especially the smaller development level companies, the companies that already have the gold in the ground or the silver in the ground, if they're a silver development company, although there's not a lot of silver development companies because there's not any money that's been spent in the silver industry. Nonetheless, these development level companies are at unprecedented low prices by any way you measure it. When you measure the value of the companies against the price of the metals, the value of the companies, their assets against what the market cap of the company is, it is really incredible. This could be a great time to be buying mining stocks, but hey, I'm fully transparent. I'll tell you, I would have told you the same thing 1 year ago. And if you'd listened to me and what I did back then, you would have lost money. So, can it get worse? Yes. Does it feel like it's going to be a lot easier for things to get better in that sector? Yes. It feels like there's a lot more runway to the upside than there is any further downside, but anything can happen. Trust me. Trust me. Has anyone here lost money in mining stocks? Ron has. I mean, I haven't sold them, so I guess I haven't really lost money, but I've felt some pain, no doubt about it. Now, let's get back to silver. I went off on a little tangent on you, which I get in trouble with from my wife, Susie. I'm going to do my one beg. Please, if you've not subscribed to the channel, please, it helps. Subscribe to Ron's Basement. I will put out a new video every day for the rest of my life. Yeah. You got a friend for life. It's a big deal you're here. You're a basement dweller. Welcome, basement dwellers. All 350 of you. Thank you. Okay, please subscribe to the channel. One last time, I'm going to beg you. You have to look at my big, fat thumb. Okay? Please give this a thumbs up. That really, really helps. Now, let's talk about silver and price. What do we mean when we say price discovery in silver? That means, like the name implies, how is the price of silver determined? Do you know how the price of silver is determined? Well, traditionally, it was determined by a bunch of fine, upstanding professionals who always operated above the board at the COMEX, and even more fine and upstanding, and they talk with that fancy British accent, at the LBMA. Is that changing right now? We've talked about this, but we'll quickly review the Shanghai Gold Exchange, which I misspoke yesterday. We need to know our history. The Shanghai Gold Exchange was started not 10 years ago, 20 years ago. We call it the SGE, and that's what everybody else calls it also. It's 20 years old. Do you know who started the Shanghai Gold Exchange? The PBOC. I like to say Pimbex, right? Online bullion dealer, but I also like to say PBOC, the People's Bank of China, because they wanted their own metals market, and it has grown and grown and grown, and now you know it's all over the internet. All the basement dwellers know this. The price of silver on the Shanghai Gold Exchange has been significantly higher than the price of silver, and the same is true for gold, but more so with silver on the COMEX and the LBMA. The Chinese are like, hey guys, we've got our own market over here in China, and our market's more based on actual physical metal, right? Because we sell a lot of it to industry. It's not a bunch of leveraged futures contracts. And guys, we think the price should be a lot higher. Price discovery, okay? Other countries around the world, including Hong Kong, right? A lot of silver and gold, they're now switching from basing their prices off of the COMEX and the LBMA to the price that's quoted on the SGE, the Shanghai Gold Exchange, which was started 20 years ago by the PBOC. So we have a new era of price discovery, but that's just the tip of the iceberg, okay? We know the COMEX and the LBMA are going to be in a world of hurt, potentially, because they've leveraged so much the tiny bit of metal that they actually have in their warehouses to back up all that make-believe silver out there, all right? The other one, and I love to talk about this because I'm personally a big fan. Do you like Keith Neumeyer? You know what? Let me ask you. Do you guys like Keith Neumeyer? A lot of silver people love Keith Neumeyer. He has been a kind of a legend within the precious metal sector, and he's like a warrior for silver investors. He runs First Majestic Silver. They're not a channel sponsor, but I am a fan of that company, and I am a fan of Keith Neumeyer, okay? More so because Keith has courage. You know, it takes courage to step out, especially as a CEO. He has spoken out against the COMEX. He has spoken out against the LBMA. He's spoken out against what he thinks is price suppression and price. And it's not just him, right? But he has the courage. He coined the phrase triple-digit silver. Yes, $100 silver. You know, we get attacked, us basement dwellers, when we talk about $65 silver. Keith talks about $100 silver. And he made the bold move to start his own mint in Nevada because he's tired of having to sell, I would imagine, all of his metal to the establishment. So he started his own mint so that he can sell silver, more of it, more volume, because they've been doing it for a while, directly to the consumer. My hat's off to Keith Neumeyer. I hope your hat's off to Keith Neumeyer as well. The other thing we need to talk about when it comes to silver is premiums. I know premiums are down right now, and for those of you who don't know, I know most of you know, and it's okay if you don't know, but a premium is the amount you pay over the spot price when you buy a silver product, when you take possession of a silver bar, silver coin, whatever it may be. Whatever you pay over the spot price is the premium. Premiums have been down or trending down lately. However, when looked at on a historical basis, premiums in the United States have been very, very high. Look, at the end of the day, I'll argue with you, the price of silver is what you pay as a stacker, right? It's what you're paying. The spot price plus the premium, to me, that's the price of silver. So we are seeing a transformation, right? Are we living in a new era, a transformation within the silver arena? I mean, I heard Ross Beatty, right? He's the chairman and founder of Equinox Gold. Do you think Keith Neumeyer's respected? Ross Beatty is like the wise elder of the silver and gold sector. He doesn't do a lot of interviews, okay? He doesn't do a lot of interviews. I heard him talk about silver. He said silver's schizophrenic. Which I thought was a good way to describe it. He said it's a monetary metal, but it also has this completely other side of its personality, which is as an industrial metal. And we know, solar, electronics, medical, everything, electric cars, everything, the unbelievable demand component from industry for silver. On the investment side, there's been robust demand for silver as well. But the there's a big, you want to hear about a big problem? We got a big problem. But might be good for you as a silver investor, but it's a big problem for the silver industry in that the amount of silver being produced every year is going down. Hello? The amount of silver coming out of the silver mines is going down. 70% of silver is a byproduct of other mining activities. Copper mining produces a lot of silver. Lead mining produces a lot of silver. Zinc mining produces a lot of silver. And I got another little secret for you. Don't tell anybody, because we still want to get some silver for ourselves, and you know where to go get it. Nonetheless, don't tell anybody. But remember, 70% of the world's silver comes from byproduct, mostly copper mining, right? That's where it comes from. Guess what? And I heard Ross Beatty say this a few months back. The new copper mines that are being developed, the easy, low-hanging fruit copper mines, they're done. The new copper mines, the deposits are much different. I think it's because they're much lower, they're much deeper, there's less silver. That means there could be there's very few companies that are silver miners anymore. And, you got Hecla, you got First Majestic. There's a handful of primary silver miners. Fortuna Silver is a company that I own a lot of, right? They're not really a silver miner anymore. They're more of a gold miner. Most of the silver miners, America's Gold and Silver, right? They pivoted. It used to be America's Silver. Well, they tried. I mean, they're all trying to get to diversify out of silver because there's at this price, there's no money in silver. So you got silver mining companies that are moving away from mining silver. I mean, couldn't you say that? There's been a shift, right? Even Hecla, they bought, what was it called? Fire Creek a few years back. That was a disaster. Anyway, that's a whole different story. The silver miners there seems to be a pivot away from mining silver. The byproduct amount could be constrained in the future as well, but there's even a triple bonus dinger. Who can get it? What's the triple bonus dinger when it comes to silver supply? Do you know? I'm going to give you the answer. I'm going to count in my head to 10. 1, 2. Hey, Coin Shop Chris, what's the triple dinger for silver? Annie Oakley, thank you. I'm not forgetting. I'm staying on track. Casey Jones. Type 5 for ding dongs. Coin Shop Chris loves his ding dongs. Ron McAdams, thank you for the super chats. Much appreciated. What's the triple zinger for silver? Right? There's hardly any. Number one, I'm waiting. Good try, Ron. But that's all right. That's the quadruple zinger, Ron. Okay, now I got 4 things I have to remember. Let's see if this 53-year-old brain can remember. Number 1, the silver miners, there's not any money going into silver, and a lot of the silver miners are moving away from silver. Number 2, okay, a lot of silver comes as a byproduct of mining other metals, primarily copper, zinc, and lead, and that supply could be constrained in the future as well due to the fact that the new copper deposits are much deeper and contain much less silver. Number 3 zinger, Mexico. Like, what is it, 30% of the world's silver comes from Mexico? Have you thought about that? Have you heard what's going on in Mexico? It is becoming increasingly difficult on mining companies. Ask Fortuna. Ask America's Gold and Silver. Ask, was it Newmont that just closed a big mine? They're becoming increasingly difficult, and they provide 30% of the world's silver. And our friend Ron, the other Ron, Luke DeMeyer, brought up another great point, recycling. Guys, it's not economic to recycle silver at these levels, okay? So the silver, when we talk about price discovery and the future for silver, it looks super bright. We got 196 thumbs up. Come on, guys, we can get to 200. That's a tradition. I appreciate you, being here in the basement. Today's a big day, right? Massive announcement here in probably just about an hour. Be prepared. We could see fireworks in the metals market. Okay, even if it's just what they expect, which is rates get left the way they are. If we get some verbiage, some verbal poop out of the Fed, it could be very, very interesting. Okay. Hey, you are the most important part of Ron's Basement. I appreciate you being here. All of you, 350 people on a Wednesday morning. It's a big deal. Okay. You matter. You're a big part of this community. You're a basement dweller when you're here, right? We get along with each other. We help each other. It's a big deal. We got 200 thumbs up. I got to ring the bell. That came from one of you, Joe F., one of our friends. All right, guys, you take it easy, and I'll see you tomorrow.